TGIF, Market Chameleons, and welcome to the Market Chameleon pre-market show with myself, Will McBride, and the man, the myth, the legend, all the way from Philadelphia, Dimitri Pargamonic. How you doing, D?
Hey, Will, how are you?
Great. You want to start with the disclaimer? It's up there and ready to be shown to the community.
Yep. Good morning, everyone. Before we get started, keep in mind, Will and I and Market Chameleon, we're not registered investment advisors. We're not a broker dealer. We're not telling you what to do. We're just sharing ideas. If you need professional advice, call your registered investment advisor or call your broker. That's what they're there for, to give you advice, provide you with guidance. There's the disclaimer.
And away we go.
Let's take a look at the pre-market report. And what I'll do is I'll start out with the pre-market report. But again, if you guys have any questions, put those in the live chat on YouTube. Will's monitoring them. He'll read it back to me. If you want to come on a show and ask your question live, we also put on a link there that takes you over to Zoom. Click on that link. You go over to Zoom. Click on raise your hand. You don't have to turn on your video camera, but it will let you in, and you'll be able to ask your question directly. Those are a couple ways to do it. If you have questions about Market Chameleon tools, analytics, strategies, you want to share things you've been doing that have been working with for you, or talk about things that didn't work out, you're expecting something different, or you saw something unusual, you're welcome to come on, because that's going to benefit everybody in the community. So while we're waiting for any questions to queue up, what I think we'll cover today is we'll take a look at the pre-market report, see what's moving in the pre-market hours. There are a few things that came over the email. Maybe I talked to some customers in the last couple of days with some questions. So maybe I'll just touch on those because, other people might have the same type of questions. Sound good, Will?
Perfect.
All right, so let's start out with the pre-market report. And these are stocks that are trading in the pre-market hours. We have our most active stocks, our biggest percentage gainers list, and our biggest percentage decliners list. Coming down here, I see 194 stocks made our percentage gainers list, 108 on the percentage decliners list. So far, we're looking like we're setting up for a more bullish bias at the open. I'm going to filter this list down to stocks that are in the S&P 500, see what's going on there. So I'm going to go up here. I'm going to use this filter here in ETF. I'm going to drop it down, and by selecting one of these ETFs, this list will get filtered by holdings in that ETF. So SPY is the S&P 500 ETF. And here I see 31 stocks made our percentage gainers list, 16 on the percentage decliners list. So again, from that perspective, we're still lining up right now like a more bullish bias at the open. And right now, of course, the market's very volatile, moving around on headline news, especially what's going on in Russia, Ukraine. We also have interest rates coming up that they're going to start raising. Inflation is definitely making the papers every day, and people are starting to really get worried about that. And I think that right now we're probably going to hear more and more about fears of stagflation. So we're going to, even if you listen to Yellen, the Fed, and what's coming out now, they're expecting inflation to kind of continue and build up more pressure, especially with oil prices this high. And if we start heading into a recession, they think it's going to be a soft landing. But if we start heading into a recession, then we're going to definitely hit then stagflation, which will be pretty bad, because I think once you're in there, then you're stuck, right? There aren't that many tools to take you out of that scenario. We have very good tools to fight deflation. Definitely, the Fed's shown that they have very effective tools there. I think maybe if we just had inflation, they might have effective tools, but when you have inflation and a recession or slow in economy, that one is difficult.
Well, that's what's going to happen, right? The only way to it seems like to slow down this is just supply and demand. It's going to become so expensive to buy anything, people will stop consuming.
It's gonna, yeah, and I think that right now, and there are a lot of uncertainties out there. Companies like certainty. You know, and if you have inflation and price instability, you have interest rate uncertainties where we're gonna, where are we headed, how far we have to take them up, geopolitical risks, all this stuff. It's not good for companies because they can't really make plans or budget around that, or so that's going to weigh in, I think, unless things turn. Like we'll have to see some significant something changing from the current trends, because so far the trends have been going against that. We've been seeing inflation kind of increasing. Now that we're seeing commodities going up, that's gonna hurt. And I think that that earnings and GDP might slow down. I think Goldman said they've raised their probability of a recession now to 35%. Janet Yellen, she's thinking we're going to have a soft landing, but to me, that's not projecting growth, right? That's not projecting economic growth. So we have to see where is there going to be somewhere in the economy where we're going to see offsetting deflationary pressures, and are we going to see growth? But right now, I think the trends continue towards we're heading into a stagflation environment. What do you think, Will?
I think you're absolutely right. I mean, certainly everyone is talking about inflation now. Where 6 months ago you had, the Fed, the White House talking about, transitory, and that everything was going to be, slow down. It wasn't going to be a problem. And now everyone is saying it's a problem. And
everybody's saying, it's hitting Main Street. People feel it. It's hard to say it, when it's hitting Main Street and people know, I talk to small business owners all the time, or you deal with, or even, vendors, and they all say, prices keep going up, so even on them, right, their costs are going up. So business costs is going up.
Certainly businesses that have great management of their inventories and are pricing accordingly, like supermarkets and the gas stations. You see how fast inflation's moving. When you go to buy a pack of organic strawberries, you want to guess? My wife makes me buy organic strawberries for the kids.
I don't know.
A small standard plastic container in the supermarket of strawberries, but it's organic, not regular.
Yeah, right. How much? Like $4?
$10.
Oh, $10. Yeah, that's a lot.
It was $4.99. It seems like a year ago.
And that's the thing they're talking about at the gas station, but it's not just to fill up your car, because the inflation, those gas prices, they're going to impact the rest of the economy, right? We depend on transportation. We depend on producing goods and certain, all that. It's going to start to feed in there, and that might be a problem. We'll see, but to me, that's what it looks like right now. Let's take a look at right now. We're setting up probably for a bullish bias at the open. Definitely, more stocks are up than down. So I'm going to come down here just to see, once in a while, we just take a look at this report. And here we're looking at the last 20 days, okay, for gappers. What happened to these stocks that gapped up in the morning or gapped down, right? So we could get insights what tended to happen after an up morning or gap up in stocks. And here we see I'm on a gap up list. And in the last 20 days, which is like 20 trading days, like a month's worth of data, we have 2,768 observations. So stocks that gapped up in the morning. And the list is down here. Right. So we could see here, up here, the name of the stock, the date, the opening price, the gap up from the previous day, and then we track. So what happened the rest of the day? Did they hold on to their gains? Did they add to gains, or did they retreat from the opening gap? And that's what we're tracking here. How did they do by 10 a.m. and how did they do from the opening price? How did they do by the close of the day, right? And that's what we kind of want to see what's been going on, because we have a lot of volatility. Are there follow-throughs? So we see by 10 a.m., which is really, during the day, we get like the two big bursts of volume is going to be during the morning, where people queue up their orders and you start seeing them enter in the very early morning. We slow down in the middle of the day, and then the end of the day, we started to see a pickup in volume again. So the first half hour, we open up. Let's see what happens at 10 a.m. from the opening price. And here we see that 51% of the stocks are lower by 10 a.m. So these are stocks that gapped up. 51% are lower, 48% higher. Some might be unchanged, but on average, as a group, they lost 0.2%. By the end of the day, 52% of them were higher. So more often that they did add to gains. This is what it's saying. 47% were lower, but on average, the return was down 0.3%. And what does that mean? That the ones that went down, even though there were fewer of them, went down by a greater magnitude than the ones pulling us up. Okay, so that's why we get this average return negative. So these are all the stocks, and of course, I'm just looking at the top one now. You got ultra shares and leveraged ETFs. So let's take those out for now, filter them out, and let's look for perhaps just stocks in the S&P 500. So now I'm just looking at S&P 500 stocks. Those would probably be, the more liquid traded stocks. So what happened to those that gapped up higher? So by 10 a.m., we see 51% of them higher, 49% lower. On average, 0.1% gain. So it looks like they're a little bit slightly more towards the bullish side, slightly for those stocks that gapped up. But by the end of the day, 50-50 for an average loss of 0.1. So they didn't add anything significant, and if they did, it was usually in the first half hour. By the end of the day, looks like they fizzled out, gave up some ground. So that's my take from insights from those. But one more thing, maybe let's take a look at the higher market cap stocks. So let's do over 20 billion in the S&P 500. So 20 billion or higher, and in the S&P 500, similar situation here, 50-50, nothing, they didn't add significantly, didn't lose significantly in the first half hour. It's coin flip. By the end of the day, also 50-50, but on average lost slightly. Okay, so if anything, they probably gave back, didn't hold on to all the gains. So that's in here, and I do see a lot of them are in energy. You know what? Let's do that. Let's take a look at, maybe they have to be in the energy sector. Why are my eyes not seeing energy? Here we go. Energy. So the energy stocks, surprisingly, also they actually fared worse, which is surprising to me, because I thought energy was, did pretty well throughout the day. But we could see here, energy stocks, part of this that were part of the S&P 500, over 20 billion market cap. So these are the higher cap. If they gapped up in the morning, you could see they did not tend to hold on to those gains. They retreated. By first half hour, 53% of them were lower for an average loss of 0.3%. But by the end of the day, 66% were lower. So you could see here on an average loss of 1.2%. So just wanted to see what happened there, but they fared worse than just all of them overall. So that's some insights on the pre-market gaps. There's a few questions. Rob had a question I just was reading on an email, and it was regarding ETF holdings, and we are still working on it. I know, keep saying, but we're still, because we're working with a new vendor, we're, kind of going back and forth. It takes, because whenever you're dealing with vendors or, third parties, sometimes to get fixes and takes slower. But the question was, well,
nothing's a plug and play, right? Every
yeah, it's not
data set has to be. I mean, we have to make sure it's worthwhile even showing the community, right? I mean, it takes
exactly
develop ways to play it, and then we have to make sure that the data they're sending us is actually correct. And I say we, but you are super thorough, and you find these issues, right?
Yeah, I try to be, but again, sometimes it's the customers also coming back.
Yeah, no, for sure.
I didn't. But yeah, we're working on it, and some of them, because we're getting like stale files, we're getting bad, so we were expecting, on some of them daily updates, and we're getting weekly, or we're getting even, it didn't make sense. The periods were getting updates, so we're going back to them, and they had to fix some of these issues. But the question was, well, if I enter in a stock, and it's a good question, if I enter in a stock like Apple, and can I see all the ETFs Apple belongs to, right? So yes, we are working on that. We had an older version here on the bow. So these are not all the ETFs, because these were just like, we were looking just at the major ETFs. Now we're going to get all of them. But if you come here, you could see, the ones we're picking up. Apple is 96 of these ETFs over here. Apple belongs to, so you could see the ETF, the total net asset values, number of holdings, and what percent of Apple is in that ETF. So this will be a better version once we get our data in there. So fix it up, maybe even try to display some of it visually or graphically. It's a good question. I think it's important to know this and see how it changes, and if it's being added to new ETFs, or there are new ETFs being added that hold Apple, the total number of shares. So we're going to keep track of the inflows and outflows of just Apple stock in aggregate in the ETFs. So it's a good question. And yes, right now I don't have it. This is the only thing I could show you. But once we get the data that we're purchasing more stable, then we will develop something that's more comprehensive. Another question that came up.
By the way, Rob says that's great, D. I had no idea this screen was available.
Thanks, Rob, and thanks for the question. I like the thinking, right? Because the right now the thinking and the questions that I'm getting are much better than in the very beginning that we were getting. And it's okay, because when you start out, you have certain types of questions, and then as you go along, they get better. So I like the thinking behind it. The other question, I was doing a demo for a customer, and here's the kind of the question that came up, and I'll just go to SPY as an example. And a lot of times when people come to the website, they'll compare some derived values against the broker. So like an implied volatility level, or even a delta, gamma, vega. And they'll say, well, it doesn't match up with what's, my broker showing me. And it's not going to, most likely it's not going to, because it's a derived value using a methodology, and it's what methodology you're using. So when we talk about implied volatilities, there are like 50 different factors that could be the reason for it, because people are cleaning up their data and using different methodologies, and we have no idea what any of your brokers are doing, right? We just know what we're doing and how we're, compensating for exceptions, wide markets, business days, calendars days, how we're estimating dividends, how we're estimating interest rates. All these assumptions go into a model to come up with a delta, gamma, vega, implied volatility.
Hey, D,
so, yeah,
we have a new chameleon join today, and they're asking, how did you get to this screen again? Could you just walk through the process?
So here, to search for a symbol, you could just type it up here, and I put an SPY search, and then I have a menu to the left. So this one is the options chain. So under options chain.
Yeah. So Kim, that was in the upper right hand corner of the Market Chameleon where it says search. You type in the symbol there, and then on the left hand corner. Perfect. Thanks, D.
Yep. Thanks. And the assumption was, well, everybody has the same thing, and it's not true, because we're talking about a derived analytic, and why won't they match up? And maybe a simpler example of it is that, let's say I wanted to, I'm a coach, or I have to figure a basketball coach, and I have to figure out, which player I'm going to play, or which player I'm going to trade, or how much, am I willing to pay for a player? And my first, let's say, statistics is I want to know how much on average does this player score, right? Does it score 20 points per game, 30, 50 points per game? Like, what is the average score? And let's say one person says, one place it says on average scores 20, and I say it's 30. Well, there's a big discrepancy there, and they don't match up, right? So what gives? Because you would think, like, well, what's the big deal? Somebody is wrong here, right? So they're gonna, and then it's how you get the data, right? How you calculated that average. So, for example, if I took a look at the 20, well, that's the average of his entire career, his high school, his college, his entire career. So the one at 30, I'm calculating and saying, well, wait a minute, his high school is not relevant. His college is not relevant right now. We're talking about NBA, right? So that data is not in my calculation, but it might be in his. Another thing is, maybe you're saying, hey, well, you know what? He's been 5 years in the NBA, and his first year, he was a freshman. Nobody was expecting. Maybe he didn't do that well, but his last 2 years, he's been excelling. So I'm going to use the last 2 years as the most relevant data. Maybe in the beginning, he was just getting used to it, getting training. He got improved. So I'm using only last 2 years of data. Somebody else might be using all 5, right? Then you're going to go and say, okay, Dimitri, well, I'm using last 2 years of data, and it doesn't match up with your data, right? Exactly. So you're getting 30, I'm getting 28. And I say, okay, but we went into the data and we said, look, there are a couple games there he didn't score high, and the reason was because he got injured, and he only played 1 minute. He got injured. He had to sit out the game. So I'm not going to, and it's unusual. It was an outlier. It doesn't usually happen, and I don't want to skew my score down. So I took those outliers out. And that's the differences, right? You're not talking about raw data. We're talking about derived data. It's how did you clean up the data? How did you make it the most relevant, right? Because you want to look at, when you're calculating these averages, you want to make it the most relevant, so you have the best information, so you could make the best and most informed decisions, right? So the person looking at the 20 average might be like, hey, I don't care about this player. I'm going to pass it up. I don't want him. But the other person might say, hey, wait a minute. I looked at the data better, and my information says that this is a good player, and I'm willing to whatever, trade him or buy him. So you see what I mean by derived analytics. That's what we're talking about here. That's why these things are not going to match up with anybody else, because we use a methodology. We have a way of cleaning up the data, making it the most relevant, taking out outliers or things that don't make sense, compensating for things. And your broker we don't know what he's doing, right? I've no idea what your broker's doing. Some people want me to explain to them, but we don't make their models. We don't program. We have no access to their logic, so I couldn't explain theirs. We can only explain ours. Does that make sense? Hopefully to people. Maybe if not, let me know.
Yeah, that's super helpful. Thanks.
So we got like five minutes left. Another thing what we could do is we say, well, SPY is up today. Since I'm on SPY, so we looked at stocks in aggregate, but we know there's volatility. So let's just take a look at how SPY itself performed the last 20 days. So I'm going to go here, price action analysis, and let's look at by hour. So this is SPY, and this is a distribution of their returns by hour, right? And I know it's I'm going to have to work on this, maybe give a better visual, but I have the data here. So let's just talk about the data. So here I see that, this is yesterday's returns, but let's look at the last 20 days. And I see more often in the last 20 days, a gap lower than higher. So 43% of the time gap higher, 57% lower. By the end of the day from the opening gap, half the time it was up, half the time it was lower, but on average, it tended, on average, lose. I'm going to come down here because we're gapped up. We don't have that much time, but I'm just going to look here, and I'm just kind of eyeballing it right now. So I'm seeing here are the opening gaps, and this is the drift. So, we had a 2% gap up, but it did add to gains that day. So it actually added to the gains. Here's a 0.6% up move, but that one didn't hold on. 0.5%, that one gained. So I'm just kind of looking for the bigger ones here. Here's 1%, it was up 1%, added to the gains here. So maybe, I'm just eyeballing it right now. I don't have that much time, but it looks to me like more often than not, when on the gap ups, it did follow through and add, to further gains by the end of the day. So that's just like a perspective from SPY. But again, we're very news driven, right? So any news throughout the day is going to impact this, so and there's continuous news cycle going on with what's going on in Russia, Ukraine, and so forth. There are no questions. Well, I'll just stop.
We did have one real quick question. Just slowly walk through how you find what ETFs own Apple Computer. Can you show that real quick?
Yeah. So like over here, I'm just going to type in Apple. So I'm going to go into the stock, particular stock page. I'm going to get over here on the left-hand side. We have a menu bar under company info. This is where we put it here because really I'm mostly just testing it right now. But under company info about, I put it in here. So far, until we build up our ETF, I'm going to give it its own section. But right now, I just kind of put it in here. This way, you guys have a visual. I have a visual of what's going on. So these are 96 stock ETFs that we picked up. And right now, we're only looking at the major ETFs, not all of them, but we picked out the major ETF families.
If you click on the weight up top, will it produce the one that has the biggest piece of Apple?
Yeah, yeah. So here, 25% of the select fund is Apple, right? 78 holdings, 25%. That's Apple. Or you could just do, by net asset with the ETF with the biggest net asset.
I'm gonna search Amazon right after this show. See that. All right, great job, Dima. Happy.
Yep.
Everyone have a good Friday. We'll see you on Monday. Thanks, D.
Yep. Thanks everyone for joining. Stay safe out there. Have a great trading day. Have a great weekend. Hope to see you Monday.
See you Monday, Chameleons. Have a safe trading day. Bye.
Bye.